All right. Hope everyone's having a nice weekend. I'm looking forward to the weekend market update. A lot of good stuff to explore today. A bit of a extension off of some of the work I did for the members and for the subs. Yesterday in the video, we explored, man, I'm really trying to figure out this bear market case is in the last 3 years, last week seemed very much like the just coming out of the recovery in 2022 stage where, and I noticed a lot of the similar accounts were bearish and didn't have any choice but to flip bullish when it was really obvious. And that's generally the way these things work. The herd typically is not going to be correct. Um, Trading in and out of these things, despite what your favorite guru is telling you, is not the way to position yourself for long-term wealth accumulation. That's why in the Forbes 100, there are no traders, or the top 100 net worth, there are no active traders. These are folks that, generally speaking, the majority of them, maybe there are a couple institutional traders, but no one on Twitter or no one on YouTube. Let's put it that way. That's posting all these different scenarios like they're actionable because they're not. And what I try to keep us focused on is the long-term trends, right? Regardless of what I believe is going to happen or not, um, if we were to get some type of major reduction crash, that's an opportunity for me to add, right? And use swing type of exposure, my day job to mine fiat such that I have the opportunity to buy if Bitcoin ever goes down 50% or 80% or 90%. And all those things can happen. Don't let anyone fool you. Just because I think Bitcoin's going to 300 now, I think it probably could go even higher than that. Doesn't mean that I don't think there's a scenario in the future where it can go lower than people think. I tend to kind of stand alone and don't like to be positioned on any side of the aisle. And this is a reminder, I'm not a financial advisor. For those that are new to me, I'm not a financial advisor, right? Just use what I'm saying for a different, unique perspective. Do your own research. Things I talk about could go up, they could go down, they could go sideways. And what I have here is a chart up of the Nasdaq, and I've been using this as somewhat of the base chart for the last few weeks because it illustrates something that is very profound to me, okay, in many respects, not just in financial markets, but in maybe things in which the media does, or the feeling that one group is trying to exude on the other, right? Where so much of the reality of the intention is masked. And a lot of things that we see, I don't want to digress and go down a rabbit hole, but we see that in financial markets as well. And what do I mean by that? So let's go look at the two last trend changes in the Nasdaq since 2018 and the way the market was feeling, the feeling that the market was instilling on participants in terms of fear and greed. Why is this important? Uh, Here's why it's important. Let's use an analogy. This is an analogy I use this weekend. If 85% of the dollars that are bought and sold every single day are passive investing. Okay, we're talking about 401ks, passive flows. The margin that creates these major swings outside of secular trends, right? Secular increases in unemployment, things that I explored this weekend to see if there's any of that stuff that's showing up here. Outside of those major secular trends, most of the fluctuation is at the margin 15% in terms of traders, institutions that are in and out, hedge funds, like that. And so if we've got a collection of 10 people, 8.5 of them are holding on to something in a circle and aren't letting go. When things could get rough for those 8.5, four of them are forced to let it go. Unemployment, right? Or three or two, right? See where I'm going here? And then the last 1.5 people or two or one, whatever, a lion jumps in that rings and scares a crap out of them. Okay, who else is there to let go of what you want inside that ring? Okay, versus if the people in that ring were really being set up, would you send a lion in there? No, you try to lure as many people as you could prior to getting what you want. That's the best analogy. Maybe it's not 100%, but that's the way I'm thinking about what I'm going to share with you next. And let's just go to these trend changes that I speak of. And the first one is back in November, September through December. So this is about 6 months of a downtrend in markets. And specifically, what was the pattern of, and that's a pretty good correction, 6 months, half the year? Yeah, absolutely. I mean, the markets here essentially from September through October of 2019, so the better part of a year were flat. And so what was the tenor of the market in terms of, oh, let me get rid of that. Let me change that and make that bright. Okay. We saw a three-legged move in the form of an A, B, C. Where did the B wave? This is my 30-week simple moving average. The market bounced in the cloud, technically a weak bounce. Consolidation overlapping here in the cloud after a failure of the 30-week. And this is the fear and greed indicator here. Extreme fear is here. Okay, this is like moderate fear. People weren't scared, just complacent, if you will. And so, oh, this is a good dip to buy, boom, boom. Okay, so we had 1, 2, 3. So let's just say following the breach of the 30-week, let's use that as the time-based component in terms of this B wave, because this is going to be important to compare to what we've got going on right now, where the level of panic, mind you, today is extreme. We haven't seen it as this extreme only one other time, I believe, in the last 7 years. 7 years. 1, 2, 3, 4, 5, 6, 7, 8 weeks of consolidation in this region under the 30-week, and then it had another leg down to the tune of yeah, about 13%. Okay? 13%. So what's the thought here? Is the market participants weren't nervous, they were the most vulnerable, okay? They were the people in the ring that didn't know what was coming. Next, and that's trend change. You're showing me here, this B wave, you're showing me at least a high time frame. Why does it keep going back to red? I want this, and I want it to be boom. Show me a high time frame rejection, lower high, if you will, prior to making a claim that a trend is going to change. Otherwise, it's just speculation. You're speculating. You're gambling. You're in a casino. All right. Next. Let's go to the COVID. The COVID drop wasn't as dramatic from the standpoint of a high time frame, right? We didn't really see a high time frame ABC. It was more on low time frame. This was just straight down, right? That's just straight down, and the market was fearful here, and it was straight down, and you got a breach on the Ichimoku cloud, reclaimed. The next week failed, so double bottom, tweezer bottom, and then V-shaped recovery. Market was fearful. V-shaped recovery to the tune of 83% prior to its next consolidation. Okay. So no clear lower high there, but it certainly went lower than potentially where we are right now. And where are we? We're kind of like in this region here. Okay. Why do I say that? Where are we now? I'm going to show you in a second, but from its relation to this 30-week simple moving average and the cloud. And so that's another 12% drop before a V-shaped recovery. Let's keep that in the back of our mind. No, let me get rid of that. Okay. And get rid of this. All right, next. Next. This is a really good illustration of my point. So this is where we had the massive, basically V-shaped correction in a secular bull market. But this one took shape very similarly to the one I just shared from 2018, where what do we have? High time frame, low, high time frame, lower high. Where did that lower high occur? 30-week simple moving average. Where did this consolidation occur in the B wave? In the cloud. And then we had another wave down 23%. Okay, 23% ultimately. But as this developed, where were markets in terms of their thought process on scared, not scared, extreme fear, complacent? Okay. Oh, this is a good dip to buy. This is a good dip to buy. Nothing to worry about, right? Nothing to worry about. If everyone's worried and positioned, who's left to sell if 85% are passive? Do you see where I'm going here, folks? See where I'm going? And so one of the things that gave me a lot of confidence in this area being a low is the amount of fear in markets, the secular trend, which I shared in the subs video this weekend, members video here on YouTube. But this is one, how many weeks? 30 week, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks to form a lower high. Okay, that's good information. Next, let's visit, since we've re-entered this high time frame uptrend, we have been this scared as a market 1, 2, and now a third time in terms of this level of fear. Both times have preceded it, 21% rally, 27% rally. Extreme fear, extreme fear. We breached those levels, okay? 2 weeks now. Now the question is any of those characteristics, 8 weeks to 12 weeks of a B wave formation, form a lower high, either rejected on the underside of the 30 or some type of consolidation in the cloud, okay? These are 2 points of confluence here. Do we see any of those things happening here? I don't see one of them happening. I don't see one. So far, the only thing that we have is the breach of the 30-week, okay? On its own is not enough, okay? What do we have now? 1, 2, 3, 4 weeks. So what I'm trying to say is, I posted this Friday on my X account. I want to give me something like this, right? Give me some type of rejection. Give me some type of consolidation in this cloud before we do that. That's a sign of weakness to form, some type of lower high here. Then we can entertain more downside. I'd be happy to entertain more downside. Why would I be happy to entertain it? Because I'd be ready to buy it should I see some things come to levels that I'd be expecting in this scenario, which I'm not expecting. Why am I not expecting it? Fear levels at levels that preceded V-shaped recoveries, no evidence on the high time frame of any type of B wave yet. I'm sure that could happen, but that's speculation. We're speculating here. It's like, again, you're in a casino betting something is going to happen based on information that doesn't align with the 2 previous high time frame trend changes. So this is just speculation. That's speculation to me, folks. Could the markets go lower Monday? Sure. Could they go lower Tuesday, Wednesday, Thursday? Sure. Could they breach this cloud? All those things are possible. But until we see some type of lower high rejected, that's all speculation. All right, that was that exercise. And next, I'm going to move into another thought that was kind of born from this weekend's members content. And that's, years ago, I was thinking to myself, look, the secular bull market looks like it needs to resolve in some type of blow off top. And I was thinking that was going to be followed by some type of massive drawdown. But the more and more as time goes on, the more and more I think that the two camps are going to be wrong. And the two camps seem to be this. With every pullback since the lows, it has been scaring the crap out of the speculators, right? Every pullback, every volatility event, which is needed in order to go higher, is causing people to say, "Oh, we're potentially topping. Oh, let's get concerned." Why are we getting concerned? That's how markets move. Markets move. This is Dow Jones since the inception of Dow Jones. That's how the markets move. Markets move. Markets move. What has preceded these? I went into that in the video this weekend. What's preceded the high time frame secular bear phases? We're not seeing it now. We're not seeing it now. That's not what this video is about either. This video is about both camps probably being wrong, meaning the wall of worry just continues to be climbed, and the confidence even on the other side of the aisle of, oh, a crash is coming, it just doesn't seem like it's setting up for that scenario either. When I look at my lifetime count of the Dow Jones, what I see is potentially a bull cycle, basically a 100-year bull cycle that tops in the potential 2030s. Okay, and this is the cycle: 1, 2 on a high time frame, 3, and then 4 however long that goes. But the counts here line up really, really well for this, where after this larger degree, 1, 2, 1, 2, 3, 4, 5, 1 ABC, 2, 1, 2, 3, 4, 5, extended fifth in this third, extended third in this first. And now we're working on, after this flat correction in the 2000s to 2009, expanded flat, 1, 2, 3, 4. These are normal size waves. This third is not extended. I see a missing fifth extension in front of us. That to me is the highest degree probability here. And that could take us to 75,000 to 120,000 on the Dow. And we're at 41,000 right now, well into the early 2030, 2031, 2032. I don't see a lot of people talking about this scenario. And so that's why this is more moving into my primary case versus looking for a crash like everyone's been looking for the better part of the last 3 years. The market, I think, is going to surprise both the bulls and the bears in a way that I don't see being projected very often. I posted this chart for everyone today in my X account. BLX, Bitcoin. Again, aligned with a lot more of my current thinkings here is a chart that illustrates why I think, again, most of us are going to be wrong. So why I don't trade Bitcoin either, right? Bitcoin is all about long-term time horizon opportunities. When it gets down 50+% are reaccumulation opportunities. The market has proven that. And what we're saying basically is if that's going to change, that the market is going to do something differently than it has behaved in since its inception. And the way it's behaved since its inception, that's what this chart is, has been a series of 1, 2, 3, 4 accumulation events. What's been the largest reaccumulation event Bitcoin has ever seen? It's the one that we just came out of, from March 2021 to February of 2024. How do we know these are reaccumulation events? It's because that's what the price is telling us. Whatever you want to call these things, ABC's rounded bottom, and then boom, consolidation midway on this one. ABC rounded bottom, cup and handle, energy released in the form of 2 major impulses afterwards. ABC rounded bottom, 1 impulse. ABC rounded bottom. So far, we've got 1, 2, 3, 4. And now what I'm claiming is going on here is a 1, 2, 3, 4, 5 wave move. Low end targets 302. high-end target that matches the energy of what we saw in two other situations in the past would take us to 581. So 301 is my minimum target. 581 wouldn't surprise me either. Sorry, can't get bearish here when the high time frame looks like this. In fact, I'm getting more bullish as you've noticed in some of the recent analysis. I think that's it for the video, folks. I was going to go through the 10-year really quickly, but nothing much has changed here. We've got an inverted hammer candle on the weekly, which is in line with what I've been talking about. This looks like a bear flag, a failed breakout, late stage distribution. We're back in the cloud. The high time frame move to me on yields is much, much lower. The dollar, nothing crazy here from the last update. Still looking for maybe a check back, maybe not. I mean, now we're 1, 2, 3 days consolidation. Maybe it checks back to 105. I don't know, but this thing looks like it's early stage downtrend of final C leg distribution. That's it, folks. That's for the video for the weekend. Hope you enjoyed it. Take care and look forward to doing more of this.